Ladies and gentlemen, thank you for joining today's Insight Forum. My name is Serena. I'm from the Public Policy Institute of Our Hong Kong Foundation and your MC today. First of all, on behalf of the Foundation, may I extend a very warm welcome to you all. Today, we're honored and delighted to have here with us Professor Lawrence Lau. Professor Lau is a Ralph and Claire Landor Professor of Economics at Lau Chau Tech Institute of Global Economics and Finance at the Chinese University of Hong Kong. And now, without further ado, may I invite Professor Lau to share with us his thoughts on the impacts of the social unrest and the COVID-19 epidemic on the Hong Kong economy and the way forward. Professor Lau, please.
Thank you, Selena, Eva, Stephen. Ladies and gentlemen, it's a great pleasure to be here today. Today's topic is on the impacts of the social unrest and the COVID-19 epidemic on the Hong Kong economy and the way forward. I have some suggestions about the way forward. The social unrest started in the second quarter of 2019. And the COVID-19 epidemic actually started in Hong Kong in the first quarter of 2020. Okay, and if you actually look at the data, you can see that in the from the second quarter of 2019, the growth rate went from 0.4% positive to negative, almost 3% in the last, and 3% in the last 2 quarters of 2019, okay? And roughly speaking, this is the impact of the social unrest on Hong Kong's GDP. And then you can see that beginning in 2020, our first COVID case actually was found on the 22nd of January, 2020, okay? And you can see that the first quarter and the second quarter of GDP went down by 9.1% and 9% respectively. So you can see this actually quite clearly. The Hong Kong government's latest economic outlook actually projects real GDP to contract by between 6 and 8% in 2020 as a whole. Okay, my own personal projection is that it will be closer to a contraction of 8% than 6% for the year as a whole. Okay. Hong Kong actually has already had 3 rounds of anti-epidemic cash relief, okay? But I want to point out that while the cash relief is actually very important, okay, because it actually managed to shore up consumption and reduce unemployment to a certain extent. But these are not sustainable. They are one-off, okay? So the question is that what can Hong Kong do as a follow-up to the cash relief? Okay, now the other thing that I want to show you is the unemployment rate. Okay, you can see the unemployment rate, and you can see that it actually was at the lowest point in 2019. Okay, about 2.8%. It is the lowest point for a long time for Hong Kong. Okay, but beginning in the third quarter of 2019, it also began to rise. You see the yellow column, and then the winter, the fourth quarter with the blue column, and that is the reflection of the social unrest. Okay, and then you can see subsequently in 2020, unemployment rate actually rose very, very fast to over 6% in the second quarter. Okay, which is where we are now, and this chart actually is very interesting. I want to try to show you the connection between the growth rate of the GDP and the unemployment rate. Okay, unemployment rate is on the vertical axis, the growth rate is on the horizontal axis, and you can actually see that there is an inverse relationship, okay, which you expect. That is, the higher the growth rate, if you move from left to right, the lower the unemployment rate, okay? And we are now operating actually to the left, minus 9%, okay? And you can see that the unemployment rate is at 6%. Now, I have to add that the growth rate is lag one period, 1 quarter. Okay, so this is last quarter's GDP growth rate on this quarter's unemployment rate. Okay, usually these things work with a lag. Now, if you look closer, you will see the following. What I have done here on the chart are the monthly rates of growth of total visitor arrivals in Hong Kong. Okay, we know that tourism is one of the major pillars of our Hong Kong economy, and you can see actually that in the second half, beginning second half 2019, the rate of growth of visitors has turned negative, and it's negative for the next 6 months for the 2019. All right, and this actually reflects the effect of the social unrest. Okay, because COVID-19 has not started yet, and then you can see that around in January 2020, it's gone down. Now, if you actually see these growth rates, they are negative 99.9%, which means practically there are no visitors left. Okay, the social unrest actually reduced it by maybe 1/2. Okay, and then the COVID actually eliminated all of them. Give you some idea. On average, in a normal year, the monthly arrivals of tourists is about 4 million. Okay, and I think last month, or the last month for which we have data, is 20,000. Right, so you can see the huge difference, and that's why all the hotels are empty. Most of the restaurants are empty, and no one is shopping. Right, so I mean that tells you how serious it is. It's really 99% decline relative to last year, same period last year. This shows you the retail sales. Okay, and it's the same picture that is beginning in the second half of 2019. Retail sales began to decline. You can see the first part, about 20+%. And then in this year, beginning this year, early this year, you can see that it's also declining, or negative growth rates in the retail. And basically, they cannot get much lower. That's why the decline, the rates of decline have actually somewhat improved, but over time. But I think if you run a retail shop, you are in serious trouble, okay? Because you have rent to pay, you have workers to pay, but you have no business, right? And this is really a terrible situation. Now, one of the things that we look at in the economy is to see whether there's gross fixed investment, okay? Because this is new gross fixed investment is what creates new GDP and new employment opportunities. But it's been declining in Hong Kong. Okay, if you look at it from second quarter of 2019, they are all negative. Okay, and then they become even more negative after this year, right? And that really doesn't bode well for Hong Kong. Okay, because that means private sector is not investing. Okay, it's not investing. It's, I mean, so that is really a serious problem. Finally, we want to take a look at household consumption. This is private household consumption, and you can see it has an impact. Last year, a slight impact. There is a decline in consumption, but this year you have a fairly substantial impact. Okay, and the consumption has came down by close to 15%. In the second quarter, okay, which is a lot, okay, and I would say that might have gone down some more had there not been these cash relief being provided to the different households. One of the things I want to also point out is to look at the stock market, okay, and it has had quite a bit of impact on stock market. There are too many lines on this graph, but focus on the red line. The red line is the Hong Kong overall stock index, and you can see actually it's come down from about 100% in the second quarter, second or third quarter of 2019 to the end of last year. It's actually lost about 10% of value, and then it would lose another 10%, and it's actually now at around 80% of the value. It has not gone up. Now, in the meantime, you could see that the green line is S&P 500. That's gone on to new highs, okay? But surprisingly, the yellow line is Shenzhen Stock Index. That has also done extremely well, surprisingly well, in fact. And the gray line is actually Shanghai, and that actually has basically kept steady relative to early 2019. All right, it's okay. Now, what we can do to estimate the impacts of social unrest and COVID-19 is actually using a very simple methodology. That is, we actually try to estimate hypothetically, what the growth rate would have been if there were no social unrest or if there were no COVID-19. And the idea is very simple. We just look at the past and see what is the average rate of growth over the last few years of first, second, third, and fourth quarter. Okay, and then we use the hypotheticals, and then we subtract the actual to derive the impact. Okay, now, fortunately or unfortunately, we actually have been able to separate out the impact of the social unrest and the COVID-19. Why? Because basically the social unrest affected only 2019, okay? And the COVID-19 affected only 2020, okay? And fortunately, the social unrest did not recur, recently. And I think that as I said, partly because of the national security law, that it really hasn't really recurred. We hope that is the case, okay? Now, basically, as you can see the data I presented, the social unrest discouraged visitors, interrupted public transportation, prevented shops, bars, restaurants, entertainment, personal service providers to open. It really is a problem. But the COVID-19 is a little worse because it mandated periods of work at home, quarantine, social distancing, and so forth. So they both have significant reductions in economic activities, especially in retail and also in tourism. But you already seen that. But what is more important is that both contributed to the formation of negative expectations about the future prospects of the Hong Kong economy. Okay? And we know that economies are driven by expectations, okay? Because you expect good times, you invest and you consume. If you expect bad times, you stop investing, right? And then you also are trying to reduce your consumption to save yourself from the rainy day. I mean, that's natural. That's why I think we really cannot expect that after the COVID, let's say we manage to control it by in another month or so, we cannot expect consumption to immediately go back to the pre-COVID level. We also cannot expect investment to go back to the previous level very quickly, okay? Because a lot of the small and medium enterprises, they are basically on the last ropes, right? And, so they would either go bankrupt or they would close and so forth. So I think that what I've been saying is that the government, it's the duty of the government to take stimulus measures, okay, to accelerate the recovery of the economy. Okay, otherwise it's going to take a long time if you just leave it alone to take the natural course. Now, based on historical data, what I have done, I don't want to bore you with the details, is that we have figured out that the social unrest actually caused a net loss of GDP of about 3.7%. Okay, now, then what about the COVID-19? Now, what I've shown here is the chart of the COVID-19, and you can see the three waves of COVID-19. The first wave actually is in January And actually it's very low. You can hardly see it now. But it's and by mid-February, it's gone to zero cases. Okay, so that is a relatively small wave. And then in March, there's another wave, mostly caused by people returning, from North America and Europe. And they have a second wave, which was controlled around April, you can see. But in June, we have the latest very serious wave. And at this peak, we had 149 cases on that day. That's a large number, okay, a large number. Now, fortunately, it's been coming down. My wife is always worried about it's going back up again. I said, don't worry, it will fluctuate, it will go up and down, but the trend, you can see the blue line, is down, okay? So we hope that it will stay down, right? It is now around single digits now, and we hope if it stays at single digit for another week or two, maybe it will begin to die down, okay? The red lines are actually the deaths, okay? And you can see that we managed very well up to around June. There were only 4 deaths in Hong Kong, right? But now we are actually over 100 now in terms of deaths. Okay. Anyway, okay. Now, one of the things that we need to do is to benchmark ourselves against other cities. I think in one sense we have done better than Singapore. Singapore, have 57,000, more than 57,000 cases. We only have 5,000. So I think in that sense, we are managing okay. But Singapore only had 27 deaths, and we now have over 100 deaths. But we also need to compare ourselves with Beijing. Beijing is a city with a population of 21 million, okay, about almost 3 times our population. Cumulative, it has 936 confirmed cases and 9 deaths, okay, which is really very, very good. And I actually want to say that the reason the mainland has been so successful, the major reason was the decision to blockade Wuhan and Hubei. If you look back, I mean, that is actually a very bold decision. You blockade it on Chinese New Year's Eve, right? I mean, I'm sure most people are very upset that it's a time for them to go home and you blockade it. But that really made the difference between what's happening in the US today and what's happening in the mainland today, okay? The mainland outside of Hubei, total cases is about 16,000 cases. Total deaths is 122, right? It's really amazing because if you didn't have the blockade, you let these people travel for another 2 weeks, I think the whole of China will be infected. And it would actually, if you look at what's happening in the US, what's happening in Europe, that's what would have happened. All right, so I think that actually was very successful. And the success really came from rapid testing and contact tracing, right, and isolation. Because the key, I think, to controlling COVID is early detection and early isolation so that people have no time. They don't have opportunity to infect somebody else because it's really the secondary infection, secondary transmission that you want to limit. And that's what Hong Kong should be working at, right? It's really rapid testing, rapid identification, and then isolation and contact tracing. You want to prevent people from infecting other people, right? And in fact, I actually today, every day, I always wear a mask, both to, not just to protect myself, but also protect others, because I have no idea whether I'm infected or not, right? Because gestation period could be as long as 28 days. So we are really not just protecting myself, I'm also protecting everybody else. I think if everyone does it, it would basically cut secondary transmission. down to very low levels. And that's the key to controlling. And that's really why it's recurring in Europe and in the United States. Right? Now, this is a chart showing that the social unrest caused a loss of GDP of 3.7%. And if we use the same calculation method, then we can say that for the first half of 2020, the loss of GDP is 6.4%. Now, how do I get 6.4%? If you think about it, it is really that assuming that Hong Kong would have grown somewhere between 3 and 4% if there were no COVID, right? So you don't have that. And in addition, you have the negative growth, right, which annualized would be, annualized would be about 4.5%. You add them together, this would give you something like 6.5%. 11.4% was predicated on the assumption that the third quarter, our economy will contract by approximately 9%, okay? And then hopefully in the fourth quarter, we'll do a little bit better, and it will contract by about 5%, all right? So the total 11%. But I'm actually confident that if we can actually control the COVID-19 and there's no recurrence of social unrest, that we will be in positive growth for the first quarter of next year. Okay, so I think that's what we're now. But let me emphasize the need for additional economic stimuli. Okay, because we cannot rely on the private sector to increase investment or the private sector to increase consumption in a significant enough way. So you need to have addition. And the other thing to remember, though, is that Hong Kong, because of the linked exchange rate system, we don't have an independent monetary policy, right? Our interest rate basically follows the U.S. interest rate, set by the Federal Reserve Board. Okay, so we have no monetary. So the only thing we can do is to take concrete fiscal measures. All right, and I think we already did with the cash relief payments. We have 3 waves, but I think that cannot last forever. And it's not sustainable. So now is the time to consider public investment or public expenditure, so that is basically to change the expectation. You need to change expectations. So people have a good feeling about the future, so they will invest and they will consume. And that is actually very, very important, is to turn the expectations around. Now, a couple of things that we need to do is to know a little bit about the background of the other economies. One of the things is that this year is terrible for the rest of the world. Okay, and almost everybody, all the major organizations forecast a decline of between 5 and 6%. Okay, for the global GDP. Although next year, the outlook is that for the world will grow, GDP will go between 4 and 5%, which is really quite positive. All right. But like I said, tourism is unlikely to return quickly to pre-COVID levels. The mainland actually also suffered. First quarter is contracted 6.8% year over year. The second quarter has turned positive, 3.2%. Now, my own prediction is that for the rest of this year, it would grow around 3.4%, which is a little on the optimistic side. But I think 3 is doable. 3% also is doable. And then next year, it would probably do about 8%. Okay, now 8% sounds very optimistic, but my prediction is not the highest. There are lots of people with higher projections. But I think it's reasonable so that I think that if you think about it, that is really what we should take advantage of is actually that China, the mainland anyway, will be recovering relatively quickly. One of the things that we need to understand, though, is that the Chinese dependence on exports has really declined. Okay, and And that actually has an impact on our role, Hong Kong's role as a bridge, as a conduit, as a gateway to China. Let me show you a few charts. This shows you Chinese exports and imports of goods as a percent of Chinese GDP. You can see that it reached a peak sometime in 2006, 2007, okay, around 35%. It's come down to now about 18%, okay? And that really tells you it's no longer as dependent on the on exports, and that's really related to what President Xi Jinping has talking about, the twin circulations. You know, that the domestic circulation is the principal one, okay, because you know the dependence on exports has declined. This actually is a very interesting picture. It shows the percentage of foreign direct investment as a percent of gross domestic investment in China, okay? The peak was around in the early 90s. In the early 90s, and it is actually, if you think about it, it's about almost 15%, early 90s. But it's now actually down to around 3%, okay? And it's actually not important anymore, okay? I mean, compared to the early days. This is inbound and outbound investment. You can see that the total inbound is quite steady, but the total outbound actually rose in around 2016, but it's now beginning to come down, okay? Because it's not being hospitable in the US and Europe, you know, so that's beginning to come down. So foreign investment is not that important. This is re-exports through Hong Kong. It reached a peak on exports on 70% in the early 90s, okay? Now it's down to 10%. That is, over time, the mainland has developed its own ports, and you're no longer reliant on Hong Kong ports and so forth. And the same has to do with transshipment of imports. You can see that they have both declined quite a bit. This chart is about Hong Kong, and you can see that the green line is actually the most interesting. This is exports to the world percent of GDP. The green line actually is the share of exports, domestic exports. These are goods manufactured in Hong Kong, okay, as a percent. And you can see that it's actually gone down almost to zero. You know, there's quite a bit in the 60s, 70s, and 80s. It's gone down to zero. And most of the exports are re-exports, okay? This is export to US, it's the same story, okay? And so we really need to take these as given, okay? That some of these things are not going to come back, all right? Now, I don't want to waste time here, but I just want to show you this chart as my projection that around 2030, 10 years from now, Chinese GDP is going to catch up with US GDP. But it's been extraordinarily fast. And I would give you a couple milestones. In 1978, Chinese GDP was less than 5% of US GDP. In the year 2000, it was less than 20%. In 2019, it was 66% of US GDP. So you can see that it's going up very fast. And that's actually why some people in the US are worried, right? It's really going up a little bit too fast. Now, some of you might be worried about the impact of the Chinese-US strategic competition. I just want to cover a couple points very quickly. In 2014, public offerings of Chinese stocks, roughly speaking, 43% US, 29% Hong Kong, and 28% A shares. But in 2019, it is already down to 7% US, 12% Hong Kong, and 81% China. So that the delisting, potential delisting of Chinese stock from in the US is not going to have a major impact. And if you look at market cap, in 2019, it's about 8.7% US, 20.9% Hong Kong, and 70% in China. Okay, so Now, but the delisting per se actually can be helpful to Hong Kong because many of the delisted shares might come back to be listed in Hong Kong. We have recently seen NetEase and JD.com and Yum China and so forth. So I think that paradoxically is actually going to be good for Hong Kong. Okay, now on clearing a settlement, you see the whole world actually basically has been relying on the SWIFT, Society for Worldwide Interbank Financial Telecommunication Network, for the transfer of funds cross country. Then there is actually could be a potential problem that people worry about because if the U.S. say Hong Kong enterprises, if they're under sanction, they can't use SWIFT. That would actually be a huge problem for many enterprises. Now, what I want to show you now is that a lot of the Chinese enterprises are now clearing their international transactions with the renminbi. Okay, this actually shows you the following. That is, it reached a peak in around 2015, but actually it's come down. It's now coming back up again. And now almost 40% of Chinese transactions, international transactions, are now clear through renminbi. Okay, so it can only rise. And the other thing I want to show you here is this. The blue line, the blue columns, basically would be the share of world settlement in that currency. So the top currency, the US dollar, close to 40% of world transactions are settled in US dollars. And the second one is the euro. And China is number 5, is the 5th. Okay? But the red column is the share of world trade. And you can see that the US dollar is used in the settlement of many world, much greater percentage than world trade. And China is the opposite. Even though China has the same share of world trade as the US, only less than 2% of China's international transactions are settled in renminbi. Okay? So that actually tells you there's a great deal of room to increase the use of the renminbi. And if you look at Japan, which is right ahead of China, Japan is about 3.7% of world trade, and about 3.7% of its world transactions are settled in yen. So if you set that as a yardstick, okay, and that shows you there's a great deal of things to be that can use the renminbi. Now, what about the way forward? I want to propose a few areas for public investment. First of all, it is the retrofitting of all public buildings to make them energy efficient. Okay, this is basically something that would pay for itself. Secondly, building more hospitals with up-to-date surgical and intensive care facilities. Okay, and I think we need to be prepared for the next epidemic. Okay, it will come. All right. Okay, there will be. So we need to be prepared. So that's also investment. The third is stepping up maintenance and major repair of public rental housing. And this is something Stephen and I talk about. And I think if we are going to sell them to the tenants, we need to make sure that they are up to, they have restored to good working condition. I mean, otherwise, it's unconscionable to sell these flats to these people. Fourthly, I think repair and restoration of the antiquated underground sewage system. Fifth is promotion of use of internet. The internet has actually become indispensable, even for low-income housing. And I think the government should take the lead to providing all public housing estates with free, I would prefer free, but affordable Wi-Fi. Okay, because it's okay because they're not taking any business away from the private providers because these people are not they are not subscribers anyway. And we really should make it available because schooling is now at home and a lot of people work from home. Lastly is the digitalization of all government documents, birth, death, marriage, divorce records, property deeds, they should all be digitalized so that you can easily do it. And now is the time to do it, right? And now the important thing is that this can be done with minimum there are lots of labor, but it has minimum import requirements and can be done right away. You need public investment, public expenditures that you can activate right away because you don't want to wait. I mean, I support the reclamation, and I support all sorts of things, the third runway, but they will take time. They will not create enough local employment to make a difference. You want to do things that will create local employment quickly and with very little import requirements. Okay, now, the other thing I want to say, I notice I still have 4 minutes. Okay, is the following. That is, Hong Kong really needs to develop a bond market. If Hong Kong really wants to become an international financial center, okay. Now you have to ask yourself, what do London, New York and London have that we don't have? All right, and it is a bond market, active bond market. We need a bond market that is deep, that is liquid, that has all maturities, right? You know, and that is what we need because that is really how people, investors, investment managers, asset managers, they want to deal in both fixed income and equity. And in Hong Kong, you know, there's nothing. Fixed income is a blank, right? And I think that's what Hong Kong should do. And I think I have a proposal, and that is we should try to get the Hong Kong Mortgage Corporation to provide long-term fixed rate mortgages, you know, because if you can provide 35-year mortgages at a fixed rate, that eliminates the interest rate risk for the borrower, but it also reduces the monthly payments. The monthly payments will be much, much lower. It will be affordable to all. Now, there are a couple other things that I don't have time to talk about, and that is to become the premier offshore renminbi center. We already heard there's a lot of room for that. In East Asian-wide stock exchange, a venture capital, R&D, and startup center. Okay, if you think about it, Shenzhen and Hong Kong combined, okay, is actually going to be much more advantageous than Silicon Valley and NASDAQ together, you know, because we are just close together. In addition, if you think about Silicon Valley, there's no manufacturing now in Silicon Valley, and we can have manufacturing, maybe not in Hong Kong, but in Shenzhen, okay, and you can have startups. So that's a lot of possibilities, and a reinsurance center for East Asia. But these are longer term things, okay? I mean, we have to try to do this after this. Okay, so we don't have time to talk about it. And what we need to do is to try to create and realize synergies in the Greater Bay Area, okay? Because that is really our future. Because if you really think about it, I think U.S.-China relations will not be improved for a long time. Okay, all right. So we really, I think our future really is to take advantage of the GBA and try to do the best we can. But of course, we can also use our traditional ties with Southeast Asia and with Europe to try to make it. Yeah. Okay. Now I'm going to stop pretty much here, and I'm reasonably optimistic that next year we should start growing, and I hope that the government can undertake some additional stimulus, okay, and because there's no use giving people more cash, right? And also, but the time for the government to act is now. So I'll stop here. Thank you very much.
Thank you, Professor Lau, for the truly insightful sharing. And now we will have our question and answer session. May I invite onto the stage our moderator, Mr. Victor Kwok, Head of Education and Youth at the Foundation.
Hi, Professor Lau. We have received a lot of questions. Thanks for the very insightful sharing. First of all, we have a special guest, Mr. Nicholas Kwan, Research Director from the Hong Kong Trade Development Council. So his question is as follows. in kickstart the economy for sustained recovery, to what extent should we factor in the repercussions of the social unrest and the pandemic, which have fundamentally changed Hong Kong's status as a hub or a super connector between the East and the West, in particular China and the US? So how to restore goodwill and trust among mainland tourists and business partners while maintaining our international profile, as you know, especially if the US and China are actually decoupling?
Yeah. That's a very good question. I might take the rest of the day to answer this complicated question. But I think he's right. Nick is right that we have to take into consideration the current situation. Okay, that's why I kept saying that Hong Kong as a bridge, as a gateway, as a conduit, those days are over. Right? But they were over even before the trade war, okay, even before the COVID, because we know that there have been direct connections. So that role, I think, we're not going to get again. Okay, that's quite clear. Now, I think Hong Kong really has to think about its role in the reconfigure situation, because we know that, for example, trade and investment between China and the U.S. Is unlikely to increase significantly, in the near term. Let's say in the next 4 or 5 years. We have to know that the containment policy, the American policy containing China, actually was not a Trump policy. Okay, because pivot to Asia, as well as the Trans-Pacific Partnership, they were both started under the Obama administration, right? Trump simply abandoned them. I don't quite know why, but there's a bipartisan consensus of trying to contain China, all right? So even if there's a new president next year, it will not change. The tactics may change, okay? But I think strategically, China and the U.S. would be competitors, at least from the U.S. point of view. Okay, so that is quite clear. And so what Hong Kong should do is to really try to find a role it can play, in this context. Now, it's not, but the important thing is that Hong Kong is a financial center, international center. What is the backdrop? The backdrop is actually the wealth and the savings of the people on the mainland, right? That is the backdrop. That is what supports our stock exchange, not the U.S. investors, right? Maybe there's some, but fundamentally the backdrop has to be the wealth and savings of mainland investors. And who are the companies coming to be listed? They are also Chinese enterprises. Okay, so I think we really should work at making ourselves useful to serve the mainland, economy, and in particular to serve the Greater Bay Area, the GBA economy. I see the GBA as a place where we can experiment with many things. For example, one could try to make capital flow freely between GBA and Hong Kong and Macau. Okay, and we can also make information flow freely between between GBA and Hong Kong and Macau, and we can make goods and people flow more freely. I think those can be done. If you really can do that, the GBA is actually as large a market as the UK, right? I mean, 70 million people, and a very large GDP. Shenzhen's GDP is already higher than Hong Kong's, right? So I think that is basically what I think we ought to do, is to see how we can contribute to the GBA. And I think we should not underestimate, for example, our potential contribution in terms of research and development. Okay, because I think we can do basic research, applied research, and manufacturing. I think we really cannot do. We cannot compete. But on basic research, we still have some advantages.
I have a related question from Apple Daily. The first part, actually, Professor Lau answered already. So, the Hong Kong's role under the tensions of China and the U.S. But the second part, what should the government do to restore FDIs and trust?
Well, I mean, trust actually. Thank you. Trust takes time to build. Okay, you cannot simply say, trust me. That doesn't happen. It really takes time to build, all right? If you really want to bring back the mainland tourists, I think we have to assure them that they would be welcome and they would be safe. I think safety is actually the most important, okay? And, bring back tourists. And so I think that will take time. That will really take time. And even if you have, we used to have many mainland students coming here. And now I think they are still coming, but many parents begin to have second thoughts. I mean, they worry about safety, and you don't blame them, right? So I think it takes time, and the government should try to provide a safe environment, okay? And so that all visitors, doesn't matter where they come from, right? All visitors coming to Hong Kong should feel that this is a safe place.
Yeah, thank you. Obviously, trust relates very much to tourism.
Yeah.
So I have a question from the audience here about tourism, actually. People are talking about travel bubbles now, government setting them up. How effective would they be in, boosting up the economy?
Well, I think it can be helpful. It can be helpful, but, the thing to think about is the following. Right now, the problem is on our side, right? As long as we still have cases, active cases, other countries are not going to let us, not going to have a bubble with us. You know what I mean? So basically, we have to do our part first. After we finish our part, then we can consider bubbles, right? And I think actually the safest place to have visitors is probably from the mainland today, right? Americans are now forbidden to travel. Many countries refuse to accept Americans, right? And so that bubble would never happen, right? So basically, I think if you really look at the history of control of epidemic, I would say that the mainland is actually a very safe place, right? Even Hubei and Wuhan, even though people still worry, but even those places are actually quite safe, right?
All right, let's turn the focus a little bit back to the Hong Kong government and what can they do. So I have a few questions here from
Sure.
In Chinese from AM730, right? 第一個問題咧就係話請教劉教授贊唔贊同全民派錢啦？咁呢個劉教授其實頭先就都多少答咗啦。咁第二個問題咧就係話嗱，而家嘅財赤就3000億啦，咁出年咧就話財政儲備咧就會跌到8000億啦。咁嘅時候咧，仲認唔認同一啲大型嘅基建項目，即係譬如話明日大嶼啊，又或者譬如話劉教授頭先所講去 digitalize 好多嘅 buildings， 繼唔繼續應該上馬咧咁樣？咁第三個問題咧就係話，有啲專家都話第四季會有下一波嘅疫情啦。咁其實防疫嘅措施又需要錢啦，重振經濟措施嘅都需要錢啦。咁政府應該點樣去平衡咧？
其實都係講錢。第一，我覺得咧全民派錢咧，我係支持嘅。但係咧，你要諗一諗就係咧，派完之後點？我諗全民派錢咧係唔可以持續嘅。即係你最緊要係要創造啲就業機會， 創造啲 GDP。派錢，你第一次派俾我使咗，第二次派俾我，唔知仲有冇第三次喎，都係唔好使咁多啦，係嘛？咁你所以咧嗰個效果咧係一路會降低嘅。同時你真係派完晒冇用，你倒不如咧做多啲項目，啲項目會產生啲就業機會，所以啲人有就業咧就有錢賺，咁啊其實係仲好嘅方式。咁呢個第一點就係咧，我覺得咧唔好隨便派啦，即係每個人1萬蚊嗰啲咧係唔需要再做㗎啦嚇，要派都派到認真有需要嘅人啊，唔好派俾我，唔好派俾 Stephen 唔需要。咁係第一，第二咧。你要諗下咧，啲項目咧，大家其實要分開咧，就係咩咧？就係乜嘢係經常開支，乜嘢係capital expenditure， 乜嘢係資本開支。喂，我啱啱講嗰啲咧，其實咧係資本開支嚟嘅嚇，即係我整好晒所有啲政府嘅樓，我整到佢全部係有呢個能源效率嘅咧，我以後慳好多電費喎。係嘛，慳咗啲電費啦，所以我就算我要借錢嚟做呢啲嘢啦，我係有錢賺喎，因為我咪借錢，然後咧每年慳翻啲電費，我嚟還啊嘛，嗰啲錢咧就唔可以話我係使咗嘅，其實唔係使咗啊，我係投資咗啊。咁你投資你自己你中意用自己剩翻嗰啲盈餘，以前盈餘嚟投又得，你話我唔用嗰啲錢。我發公債嚟做又得呢個做得到嘅，因為呢啲項目咧，其實咧主要嚟講咧，佢都會自己賺翻嚟嘅，即係唔係話派咗錢就冇晒影㗎啦。呢個仲有，所以我覺得唔係咁嘅諗法要做嘅嘢唔可以慳得，唔可以話唔使即係你，所以咧，我覺得要睇咧就係衡量咧，就係呢個係基建嘅項目。長期嘅項目係可以拉平或者甚至可以賺錢嘅項目咪做咯咁你所以呢個係第一咁啊，你咪最尾個問題咧講下一波咁我諗咧希望咧我哋處理呢個疫情處理得好咧，希望冇再去下一波㗎啦佢其實佢控制疫情咧，其實有兩部分嘅，一部分係輸入。輸入嗰個咧，我哋一定要用最嚴格嘅方式嚟管理。即係我唔理你邊個，你喺外地嚟，你就要隔離14日，係嘛？仲要試驗咗3次都係negative， 都係陰性，先至俾你出嚟。呢個係要保護全香港嘅人啊嘛，唔理你喺邊度嚟唔理咩人都要咁樣做。呢個就係唔俾佢再輸入啦。你要做到呢度咧，先至有用啊嘛！如果你自己做得好，成日都有人嚟啦，你係搞唔掂嘅呢啲嘢。呢個第一。第二咧，我哋自己啦要做好啲。我覺得咧有啲遺憾咧，就係上次呢個免費檢測咧，啲人唔多啲去做。我同我太太都去做咗，冇事㗎，又唔痛，好快出去因為咧呢個咧係保護自己、保護其他人一定要做，因為點解咧？我啱已經講得好清楚，就係要控制呢個疫情咧，最緊要咧就係唔好俾佢有第二次傳染。譬如我有病，一驗到即刻隔離，咁我冇機會傳染第二啲人啊嘛。你一個傳一個咧，其實好難控制嘅。你睇美國、歐洲就係咁啦，佢就係做唔到。呢個做得到，所以咧，我覺得咧最緊要就係要控制到唔好有第四波，要控制到唔好有第四波。我覺得係做得到嘅，呢個係做得到嘅，呢個，譬如你舉個例俾你即係大家好似話我哋要自由乜，但係實情你而家搞到美國、英國、法國都完全係第二、第三波，仲好多人添嗰個係有問題。
So we have 3 more questions from Ming Pao. Some of them Professor Lau addressed already. For example, one is about the cash payout scheme again.
Okay.
One is about the fiscal, spending against a backdrop of fiscal reserves.
Right.
I think the third part, maybe Professor Lau would want to add.
Sure.
With the government having no interest to provide more cash payouts, do you expect a higher unemployment rate in the coming quarters?
Well, I think the cash payout, I kept saying, is not sustainable. You always have to think, okay, I pay out another 300 billion. What next? Right? That's not improving the economy, right? So what we really need to do is to have government actually do some public investment or public consumption to create more jobs and create more GDP. Okay, I think that is really the key, is to have real economic stimulus, right? Okay, and these things help. And the other thing I want to emphasize is the importance of expectations. Yeah, important expectation. Let me give you a concrete example. In the great global financial crisis, right, about 2008, China, the mainland economy, actually even grew faster in 2009 compared to 2008, right? Even though, the rest of the world collapsed in 2008. And do you know why? Because in 2008, right after the collapse of Lehman Brothers, within 6 weeks, China rolled out an economic stimulus package. 4 trillion yuan stimulus package. Okay, within 6 weeks. Very, very fast. But the money actually did not begin to flow until at least a year or so later. Okay, but the important thing is that the fact that there is this 4 trillion yuan stimulus package, all the private sector says, oh, it's going to be okay. We don't have to worry, right? So they would invest, and the economy actually, 2009 actually grew very fast, right? And that is the importance of expectation, because people look at expectation. So I think if the government actually announces some new program today, it would give people hope. It would give people expectations, good expectations. That is what is going to turn the economy around. That's what's going to accelerate the recovery.
All right. Bearing in mind the time, I think we'll have the last question from the audience. So you mentioned a lot about public investments, but there are comments that public investments are often not the most efficient form of investment compared to private investment. So, but how do these public investments ultimately stimulate the private investment in Hong Kong?
Well, think of it this way. I think public investment, private investment, they are really complementary. Okay. Now, if you actually, think about a place like, let's say, Sa Tau Kok. Okay. Now, no one will invest there, right? Why? Because no one can go there. It's a forbidden area, right? You need to apply every time you go in, right? But if the government actually says we'll build a new road into Sa Tau Kok, right? And and it would eliminate all restrictions. Everybody can go there. Do you think this will lead to more private investment? Yeah, I mean, they are complementary. We really should not look at private investment and public investment as competitive. They are mostly complementary because the public is doing something that the private sector will not do, right? Is there a private sector that would build the third runway? No, right? So they are complementary. So don't really think of the public as doing things that the private sector can do. You see, I'm a true believer that the government should never do something that the private sector can do, right? You do it only because they're complementary. Right?
And this concludes today's live webinar. Once again, thank you, Professor Lau, for sharing your valuable insights with us today. Our next Insight Forum session on 23rd of October will feature Mr. Bernard Chen, President of Asia Financial Holdings Limited and Asia Insurance Company Limited, and convener of the Executive Council of the Hong Kong SAR. Please stay tuned for more details on our Hong Kong Foundation's main Facebook page and the Public Policy Institute's 政策 Facebook page. It's been a pleasure speaking in front of you today. Thank you all for joining. Stay safe and have a great day.